And welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Wednesday, January 6th, 2021, and I am pre-recording this Trading Places Live for Thursday, January 7th. Futures are definitely higher this evening, so it looks like we'll get off to a pretty good start on Thursday, depending on how the overnight goes. But it was a wild day on Wall Street on Wednesday and in our nation's capital as well. I guess probably should start the show with at least a brief discussion of what took place in Washington, D.C. But we did have the Trump protesters rioting around the Capitol. I don't know. To me, it doesn't seem to matter which side of the fence you're on. There's really no place in this country for violent protests. And quite honestly, I feel like it's an embarrassment to our country. And so hopefully things will begin to settle down. I don't want to get into any political discussions, but as far as how the market reacted when the protesters were storming the Capitol, we did see the market start to take a hit. Longer term, this honestly should have very little impact in terms of valuations of companies. So I don't think there's going to be any kind of a long-lasting effect in the stock market. In fact, as I mentioned, after hours, we do see futures higher, and I suspect we're going to, continue to move up in the markets. If you're new to earningsbeats.com, I do want to just point out, if you go over to Earnings Beats, there is a sign up for our free newsletter. You can just type in your name, email address, hit that subscribe button. This is a newsletter that's published 3 times a week, Mondays, Wednesdays, and Fridays. It is completely free, no credit card required. You can unsubscribe at any time. Love to have you join our community. Again, just type in your name, email address, hit that subscribe button. You can see over here, part of our paid service is putting together 4 portfolios, which include 10 equal weighted stocks in each of the 4 portfolios. And the performance there has been outstanding. This quarter, we're easily outperforming the S&P 500 again. And you can see our since inception performance on each of our portfolios is well above the S&P 500, with the only exception being the income portfolio, which is much more conservative and is trailing in terms of the since inception returns. Moving on to the action on Wall Street on Wednesday. We did see the Dow Jones Industrial Average up 438 points. We're up over 700 points at one point in time, and we're above the 31,000 level. But we finished back at 30,829. I just think it's a matter of time before we get that first close over 31,000. I think behind that, we're going to see 32,000, 33,000. I believe the market continues to go higher. That's been my call for quite some time. I'm not changing it at this point. I think with the historically low interest rates, the pent-up demand that is going to be unleashed after the virus, this period of infections is over, which I'm no scientist, but based on listening to some of the scientists and other experts in the area, I believe it's probably going to be sometime in the second quarter that we begin to see a significant reduction in the number of cases of COVID-19 in the U.S. And I think once those cases start going back down, you're going to see folks really wanting to get out. And that's going to just continue to light a fire under what's already been an incredibly strong market. But the Dow did finish up 437 points. The S&P 500 up 21. The NASDAQ down 78. So we did have a bifurcated market. It wasn't everything going up. Technology was hit really hard, and we'll look at that in just a minute. Mid caps, though, did very well. I can tell you that the IWM, which tracks the Russell 2000, was up more than 4% on Wednesday. So small caps and mid caps really led this rally on Wednesday. Financials also a big beneficiary of the 10-year Treasury yield, which broke above 1% for the first time since March. We were up 9 basis points to about 1.05%. We'll look at that chart in just a minute. But financials tend to do extremely well when rates are on the rise, and that's exactly what we saw on Wednesday. Materials also strong, energy strong. All of these groups, all 3 of these groups were above 3%. Materials and financials both above 4% gains. Utilities finished up about 2.5%. So four really strong groups, one of them in the aggressive area, financials. And that just adds to the bullishness that we've seen across most of the aggressive sectors the last several months. Technology, however, took a break. It was not a good day for technology stocks. You can see the XLK down 1.72% on Wednesday, and that was the reason we saw the NASDAQ lagging. NASDAQ and the, actually NASDAQ did not finish below the 20-day moving average, but the technology group did. Finished at 126.51. The 20-day EMA is 127.40. So we saw a little bit of a breakdown there. I'm not overly concerned at this point, but I certainly would feel better if we see technology move back to the upside. I can tell you the after hours action is favoring the NASDAQ. It does look like we're going to see a bounce back on a relative basis in the NASDAQ tomorrow. But again, this is just, this is being recorded on Wednesday evening, so it's hard to say overnight where we'll be in the morning. But at least based on what we're seeing right now, I would be expecting a bounce in the NASDAQ tomorrow. 10-year Treasury yield. As I said, big day. We finished at 104. I think I said 105 earlier. 104, up 9 basis points, though. That's a big, big move. We were in this ascending triangle. See the equal highs coming across here, the rising lows off of an uptrend. That is a bullish continuation pattern, and we got the breakout. That's exactly what we should have been expecting, and that's what we got. And we closed at the highest level on the 10-year Treasury yield since back in mid-March, right? Literally at the peak of the selling of equities in the U.S. I think March 23rd was the low, March third or fourth week of March. But the big move up in the 10-year Treasury yield did reach about 1.3%. And I believe that's where we're going to be heading back. I don't know that we'll get there right away, but I believe we're going to be in an uptrend that'll take us up to challenge this March high. As far as economic reports due out on Thursday, not a whole lot. We do have, of course, initial jobless claims. Last week, the number was 787,000. We're expecting that to jump up to 803,000. And then we'll get December ISM services. In November, that was at 55.9. That's expected to drop back to 54.6. So we are expecting a little bit of a pullback there. Let's move on to talking technically. For me, with the yield moving up the way it was, or the way it did on Wednesday, I think financials are the key. And financials had a big day on Wednesday, up 4.42%, finishing at 30.50. And I don't know if we want to get this technical, but when you look back February, the high candle body, which candle bodies look at opens and closes, the highest we had back here in February was 30.49. So literally we took it out by 1 penny. Now, as I wrote in the daily market report to our earnings beats members, usually when you have a big move up and you're testing a key resistance level, you'll fail, at least on the first attempt. I don't know if we pull up here on a 10-minute 5-day chart, you can see we got up to over 30.70 and we did pull back. Now, I wouldn't necessarily call this the failure, but we did rally right at the end of the day to get back to that 30.50 level. We were at 30.40 just before the close, made that run and did finish 1 penny above resistance. We'll see whether or not that matters on Thursday. But watch the 10-year Treasury yield as well. If that pulls back, if the yield pulls back, then I think we're going to get that pullback in financials. But if the yield continues moving up, I doubt that we're going to see much selling in financials. I think we'll see continued buying. All right, moving on to the chart lists. We keep a number of chart lists at Earnings Beats, and I think this is one of the best features at StockCharts. I really do. Just to be able to organize your work. And, we do a lot of research at Earnings Beats, and this is the way that we're able to organize our work and then distribute it to our members. So any of our members who are also members at StockCharts, if they're extra members or pro members, we can send them we provide links and they can download this chart list. So for instance, the strong earnings chart list, if we put this in edit mode, you can see there's 491 stocks on this list. These are all companies that beat Wall Street estimates in the last quarterly report. All of these companies beat Wall Street estimates as to both revenues and earnings per share. They also are liquid. So we want to make sure that volume is such that members don't get stuck in positions without having the adequate volume to be able to get out easily. So for us, it's generally 200,000 shares a day is what we look for. We'd like to make sure that these stocks have at least that kind of volume. And then we look at relative strength and the charts just technically. And if we're comfortable with a stock and that it meets the earnings criteria that we set, also is liquid, also looks good technically, or maybe it's the group that looks good technically, maybe the industry group, then it's added to the strong earnings chart list. So right now, 491 charts on here. And one of the cool features about the chart list is that you can pull this up in summary view like this and check out, top performers. Click on this percentage change column. All of a sudden now I can see the worst performers. So if your strategy is to buy pullbacks, one great thing to do is first of all, you can sort by scooter and then just go down. These are the highest ranked stocks. Scooter score is a relative strength score. So now I already know these companies have strong earnings because that's how they get on this list to begin with. Now I can look to see what the strongest stocks are in terms of relative strength. And if you've been following the market at all, Tesla and Enphase, two companies that have been absolutely awesome. They've been great performers over the course of the past year. Tesla, 99.9 on its scooter. Enphase, 99.8. So we're talking about, top companies out there right now. And they, when we look at the list here, look at almost all of these companies at the top with high scooter scores. Look how they did today. I mean, these are major winners, 12% on Enphase. And then you got 5.5% on Tapestry. Sunrun, 16.53%. SunPower, 20%. Of course, renewable energy stocks did incredibly well today. But just look down the list. I mean, 7%. Here's a apparel retailer stock, L Brands, LB. I've recently been talking about apparel retailers and clothing and accessories. Here you can see a clothing and accessory stock with a scooter now 99.7. These are, here's another one, Tapestry, which I just talked about. So these are the types of stocks that are beginning to show tremendous relative strength. They haven't been doing this for a year, but they have been doing it recently. And I would expect to see some additional strength out of some of these stocks. So you can use these chart lists in a lot of different ways. But what you can do is just look for the high scooter scores and then maybe look for stocks that have pulled back. I can tell you technology was weak, but software really has been struggling. And on a relative basis, software, they're really almost on the verge of breaking down. I don't really like what's going on with software right now. I think the fundamentals still line up pretty well for software. I think it's more about rotation right now in the market. So a lot of folks, investment managers and so forth, are locking in profits on some of these stocks that have been incredibly strong in software for so long, and they're putting that money to work in some other areas. And I don't know how long this goes on, but we need to at least recognize that it's taking place. But if you go down the scooter scores and we just scroll down, you can take a look at some of the stocks, that have been performing very well that didn't have good days, and maybe find some that might make some sense. But as you go down, you're going to see a lot of these stocks were stocks that I think for the most part did very well during the lockdown back April, May, June of 2020, and continue to do very well throughout 2020. And some of those stocks are the ones that are seeing more profit taking right now. All right, so that's the strong earnings chart list. We have a number of different chart lists. I'm going to pull up another one, which is our raised guidance chart list. And the raised guidance chart list, again, sorted in Scooter. You can see end phase. They had their guidance raised during their last earnings report, and they'll be reporting on February 16th. So for our members, not only do we have a list of companies that showed raised guidance, or they gave raised guidance in their last quarterly earnings report, but we also provide the date of their next earnings in here. So pretty good information, I think, for our members to kind of chew on and look for some great trading candidates. If I put this in order, and actually let's take a look at the edit. There are 279 companies that raised their guidance that look pretty good technically and made our list. And one last thing I'll show you is that you could go back and take a look and run a scan. And on this scan, if I just type in here, new scan, I'm going to get rid of all this. The only thing I'm going to do is I'm going to pull up the strong earnings chart list, add that, and then I'm going to pull up the raised guidance chart list and add that. And so if I run a scan with these two chart lists, what it will return is any company that is on both of these chart lists. So we had 491 on the strong earnings chart list, 279 on the raised guidance, but I can run the scan and find out how many are on both. So not only reported earnings that beat, but also raised guidance. And I think this is a pretty interesting list. So there's 146. You could sort it by Scooter. And there you can see end phase, which you saw was on both of them, comes up here along with many others. But, you know, check out those Scooter scores. You could download this then into a new chart list. You could just put it into, I usually keep like a scan results. So here I just put scan results other, drop them right in. Now I've got the 146 stocks that are on both of those chart lists saved into a separate chart list. And now I could actually go in and run scans against this if I want, just depending on what I'm looking for. So anyway, I think the chart list is a really cool feature at StockCharts. All right, let's move on to the Scooter report. And so for the Scooter report, the big thing is I just want to show you, make sure you know where this is and how you can access it, because Scooters provide you, if you don't do any other relative strength analysis, Scooters provide you a really good resource in determining how a stock is performing relative to stocks of similar size. So it is broken down by large cap, mid cap, small cap. But over here on the left side under member tools, when you're on your dashboard, just go all the way down to summary pages right here. And then at the bottom, you'll see Scooter reports. And if you click on this, this will bring you to where I was when we started this segment. And you can see large cap stocks. This is the listing. Now, in addition to the order of the current Scooter, you can also change this to look at stocks that made big moves. And here are the stocks making big moves to the downside in Scooter scores. And check out all the technology names, and many of them being software names that took big hits to the downside in their Scooter score. That doesn't always coincide with a big move down, you know, in the action today, but usually, you know, there's some correlation there. But you can also see which ones moved up the most. So you got an entertainment stock. Communication services is a group that I like, but look at all the financials. That's really where we saw a lot of strength today. So you got a bank, investment services, couple asset managers. These are the types of companies that really had strong days on Wednesday and started moving up quickly in terms of their Scooter scores. Now, again, here's the large caps, but you can do the same thing with mid caps, and you can do it with small caps. You can do it with ETFs. So if you want to see which ETFs are making big moves, here's the big movers to the upside in terms of their change. And then we can also flip it, and here's your downside. So very important information, I think, that you can glean from the Scooter reports. One last thing, we'll go back over here to large caps. In addition to seeing the movers on an intraday basis, we could look back for the last week and see which stocks have really dropped over the last week or which ones have gained. So that, I think, is really important too, to give you a little bit more perspective, not just on today, but really what's been happening in recent days. Great information for short-term traders for sure. All right, I'm going to move on to earnings spotlight. Hard to believe, but we're getting ready to start up earnings season again. Next week, I think it's next Friday, we will get earnings reports from JP Morgan, Citigroup, Bank of America, Wells Fargo, PNC. And that, to me, is when earnings season kicks off, when we get all the major banks starting to come out with their reports. So that will be next Friday. In the meantime, however, we do have some earnings reports coming out. So let's go over some of these. These are all companies that are going to be reporting on Thursday. Now, the first one here is Micron. Micron does not report until after the bell on Thursday. This is one of your best semiconductor stocks right now. Micron, since bottoming on a relative basis back in August and on an absolute basis, you can see the stock's gone from 43 up to 77. So we're talking about an 80% move, maybe a little bit more than 80% in 4 months, 4.5 months. So a huge move there, but look at the relative strength. Here are semiconductors moving up, but here's Micron moving up versus semis. Here's the semiconductors. So semiconductors are doing well. Micron, however, is outperforming the semis and clearly crushing the S&P 500. And that's what we want. We want to find companies that are outperforming the S&P. So based on what's happening and what I'm seeing on the chart, I can go out on a limb here and say I believe Wall Street is accumulating the stock, and I would not be at all surprised to see a really good report and perhaps even a better outlook based on the way the stock's trading. That's the beauty of technical analysis. You know, we don't have the ability to call company managements and sit down and have a nice discussion with them with what's going on in their business, how they're lining up versus their competitors, what their margins are. We can't do any of that, but Wall Street does. And then you can see which stocks they favor simply by looking at relative strength. So these charts are really important. And if you want to, just take a picture or come back and look at this later, this is how I have my chart set up. I like all of those relative strength panels because they tell me when I look down and I see all of this going up from left to right, I know I've got a stock worthy of owning. All right, so that is Micron. Now we have others that will be reporting. These are all going to be reporting in the morning. So probably by the time you hear this recorded Trading Places live show, you probably have already seen these reports, or certainly they're out. Constellation Brands, looking at the relative strength, we're starting to see it build from left to right. See how we're going up here? I would expect, I don't know about good numbers because this was a stock that was not doing well a couple months ago, but I think we're going to see some really good guidance and maybe good numbers as well. But things are definitely improving here with Constellation Brands. WBA, which is Walgreens Boots Alliance, not a fan of this stock. Still got work to do. Taking out this double top around 43.5, 44 would be the first step. Volume picked up on Wednesday as we did make a move up. Stock finished up 4.5%. AD line still pretty weak. That's accumulation distribution. So we need some work here. This chart is not quite ready, in my opinion, to make a move. And you can see on relative strength basis, we've been hanging out closer to the 52-week low than the 52-week high, which was, a year ago. So not exactly looking great. Here is WBA relative to the S&P. So you can kind of see that this isn't looking quite the same as the other two charts I just showed you. Conagra Brands, CAG, sideways consolidation. AD line's not bad, but relative strength, we've been deteriorating now for 6 months. relative to the food products group. So this is a stock that I'm not overly excited about. LW, which is Lamb Weston Holdings. This has been trying to make this breakout above the November high. Big move up with the vaccine news. That's when that first vaccine news came out from Pfizer. After a big move up, we've sideways consolidated. Need to get that breakout over $80. Until that happens, I'd be a little careful with the stock. But when it does happen, if it breaks above 0.14 on this relative strength chart, then you'll have one of the leaders in the food product space. So this one is improving, but we need to see the breakout. Helen of Troy, HELE. This is another one that's just mostly been going sideways. We have broken out recently. We're bouncing off the 20. So it is definitely picked up. Relative strength starting to pick up again. It's improving. Volume trends definitely looking better. There are going to be a lot of stocks that look better than this one, but this one is definitely on the improve. And let's take a look at one more. This is a stock that had been doing great, pulled back, looked like it might have been breaking down, and it has just absolutely roared to life the last couple of days here. This is actually one of our portfolio stocks at earnings beats. I suspect we're going to have a big report in the morning, but we're going to find out when they report. Huge move back in October, and we've been sideways consolidating ever since. Now, bad news, I don't like the AD line. It's been going down here, just set a new recent low. But we had very, very strong relative strength up until that October report, and now we're consolidating. I think we could put in the right side of a cup here, depending on how earnings goes. Good numbers, though. Don't be surprised to see a run for 26. To the downside, I'd watch maybe 1775. All right. Last segment for today, the three you must see. I've got three short squeeze stocks, and I focus a lot on this. I talk about it with our members because I do think they present some nice trading opportunities, but you have to understand how they work. They go up a lot of times based on short-term inefficiencies in the market, and that's what we're looking to take advantage of. These stocks are heavily shorted. Nordstrom's, JWN, look at this move up. When it finally started going, shorts got squeezed. Look at the volume coming in. That's your real clue. But a big move up, sideways consolidation, just made another breakout. Volume started to pick up. This one will be interesting on Thursday. SKT. I do want to say I own this one. SKT, big move up through the 20-day. Looked like it was going to challenge. Didn't quite get there. Couldn't quite get through. A breakout above, let me give you the exact number here, 1128. So today's high was 1128. But a close above 1128 would be very bullish on Tanger. And then the last one I have for you, also own this one. This is Michaels, M-I-K. Really strong breakout here, and the volume has been picking up. I don't know that the shorts are really being squeezed out yet, but that volume is starting to pick up. Things could get very interesting here in the near term. All right, that is it for today. Appreciate you tuning in. Again, hopefully things will settle down in Washington, D.C., and the market continues its rally. Everybody have a great day on Thursday. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.